Here we are with another weekly close video for Bitcoin. It is Sunday. Where do we think Bitcoin is heading? Is it going to be above some key levels, below some key levels? Is it going to be bullish? Is it going to be bearish next week? Let's take a look at Bitcoin. We're going to be taking a look at smart money concepts, a little bit of 𝗕𝗘𝗪𝗧𝗧 theory, and some macro level views for BTC. As I get into this video, if you find it useful and informative, smash that like button. Really do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, guys. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's the first place that we go to notify you of everything that's going on in the crypto space. So why not check it out? Linked in the description down below. And yeah, let's get right down into this one, right? So to start with, I think it's probably important that we reflect on the current structure of what's been going on, right? So we've had a pretty good run from the low side of November up to where we are right now. It's about an 88% move. It's pretty good. However, I am concerned. I am concerned because we are heavily overbought on the weekly time frame, and you know, we could be looking at a bit of a move to the downside. My biggest concern really comes from an Elliott wave theory structure. So we'll start maybe taking a look at that down here. Okay, so if we jump to my daily chart, right, we can see that we still expect this Z wave down here. Okay, and that takes us more towards the kind of $18,000 to $11,000 levels. But if we take a look at it from a weekly standpoint, the bigger concern that is here is that this corrective structure upwards, which it is, it's not an impulsive structure. It's not doing 1, 2, 3, 4, 5. I know people want it to do that, but it's not doing that. And as such, we should be, you know, thinking, well, it's corrective to the upside, and well, normally when you have a correction like this, you do end up moving to the downside. But let's reflect on the fib levels, right? So we've retraced up just towards the 38.2% level. 50% level right here is the interesting zone. This is also a coincidence that it also tallies up with our resistance line up here as well, 32,917. Our 50% fib level is 32,677. So it's going to be interesting to kind of see, is the 50% level going to be the rejection? Now, for those people who understand Elliott wave theory, a B wave structure is usually quite unpredictable. It's unpredictable because it can be so many different structures, right? And when we have so many different structures kind of in play, it's really difficult to know exactly where things are going to retrace to. Now, I mention this because this particular move to the upside could be a B wave move. If I can get my words out, could be a B wave movement. And a B wave movement to the upside would allow for a C wave to the downside, and it would be incredibly bearish. And I don't really want that to play out. I want us to be in a bullish market. I want to be going to the moon and all those kind of things. I just don't think we're really there yet. So my big concern here is that we go up towards this 50% level, which is typically an average position for a B wave, right? We could see it moving up there. It's also possible that you move up towards 50K and still slide all the way back down again, right? The concerns you have here is there's a lot of things that are driving this move to the upside, and it's not really what you would normally typically expect of a bullish market. What's really driving this is how the dollar is falling from dominance, right? And when we see that, we can see that you need more dollars to buy your cryptocurrency asset, as a lot of supply has increased on the dollar side of things. Basically, there's a lot more supply. Your dollars don't go as far as they used to. You could almost argue that the dollar has been devalued by increasing the supply. Now, what you're seeing really is a lot of Forex traders dumping their dollars in favor of other currencies. And it's not just Forex traders either. You're seeing a lot of countries around the world also dumping their dollars in favor of doing foreign trade in their own native currencies, or coming together under the BRICS and doing it in different currency. Essentially, there's a lack of trust for continuing to trade in dollars, and that's quite clear and obvious. So not only do you see an increase in supply, you're also seeing a lot more selling pressure on the dollar side of things. This basically allows that DXY to drop down. When the DXY drops down, other assets move to the upside. You now need more dollars to buy your assets. So the question really becomes, do you want to be trading Bitcoin for dollars? Probably not. And under that hyperinflation $1 million kind of BS that you're kind of seeing all over the place at the moment, you know, it comes down to the same thing. You're not going to want to trade one Bitcoin for $1 million if $1 million, it doesn't really buy you much, right? So understanding actually you're going to be looking at different pairs, I think is probably a better way of looking at it. So when we take a look at this and we think, yeah, sure, we could probably push up higher, but we're not going to want to make those trades. But from a structural point, from our data here, we could be arguing that actually there's a move to the downside to be had, and it might not be overly positive. So yeah, I'm concerned that we have that kind of structure on the horizon here. Now, in a nice, neat world, really what goes on is we come down and we fill out our fair value gaps. We don't have to have a new lower low. I do suspect we probably do have to, though, considering we haven't seen institutional investors really buying. They've just been coming out. And I'll try to fix my APIs for CoinGecko over the next few days, so I'll start to be able to share that data again. But essentially, you know, what's going on there is there's a lot of selling pressure from the higher wallet counts, or the higher BTC wallet counts, that is like 100 Bitcoin or more. There's a lot of selling pressure there. Yet on the lower side, where it's like 0.1 Bitcoin, there's a lot of buying pressure, right? So we know that retail investors are coming in, and you're seeing institutional and whale players coming out of the space. So smart money is coming out. And so these gaps right here are interesting. It does looks like a lot of manipulation pushing the price up higher, specifically on the lower time frames. And we can see here that these are gaps that are likely to get filled out, in my opinion. I think we are going to come down into these lows, and I think that's going to trap out and damage a lot of people. That being said, we can still push up higher on the shorter time frames right now. So I'm not saying that this has to be an immediate reaction, but I am concerned that we are at 99.98 on the stochastic RSI positioning, meaning that we should be thinking about a move to the downside. Now, we're not fully oversold yet, overbought yet on the RSI, but again, you can kind of see the last time that we were up this high on this RSI, it wasn't a good time for Bitcoin. It was, in fact, the all-time high last time it was approaching these kind of levels. So we know that there's a slide coming to the downside, and it could be very, very bearish. So just bear that in mind. So let's come over into back into our stochastics here, and what we'll do is we're going to reflect now on positioning, right? So if I come over into this one, what do we see? Well, we can see that we're above this key level over here, right? This is the area of resistance that we were fighting before. This was 24,316 to 25,231. So we're above there now, right? Coming back down, retesting and confirming the previous resistance and support could be an interesting move as well. So don't be too surprised if you do see that kind of pullback. That would be very, very natural, and I don't think it would be anywhere near what would have to happen anyway. Now, in terms of how long we've been up in this overbought area, it's been 63 days. 63 days. The time before that, it was 77. The time before that was only 7 days. The time before that, 77 days, and then 70 days. So we're right up inside that kind of average mean now, where we should be thinking about starting to see some kind of slippage in terms of bringing that stochastic RSI to the downside. Now, if I throw on here the Gaussian channel, the Gaussian channel is signaling to us that we have a potential bullish break here. Okay, so we can see that we're above the midline now. This would be a real good thing for Bitcoin. I don't believe that the Gaussian channel is actually going to be giving us an accurate representation, but I'm going to talk about it, and I'm going to keep an eye on it, because historically speaking, the Gaussian channel has been a good indication for both bearish and bullish markets. So right now, closing above this midline being 27,595. That's going to be the key, I think, for this weekly close position. Are we going to be closing above the $27,595 level, or are we going to close below it, right? And I think we'll close inside the Gaussian channel. Can't see us breaking above the 32,798, and I don't see us dropping down lower than the 22,391. The question just becomes, are we going to get a green candle on this Gaussian channel? Because if you're above that midline, you are going to be talking about it being green, and if you are, that could be an interesting point to see some movements to the upside. Now, this Gaussian channel has been, as I said, historically pretty accurate in getting bullish times right and bearish times right, but I do think we have different variables, like I said many times before, that could potentially change how the Gaussian channel's approach to the market is. Essentially, it's just glorified averages. We can't get too carried away with that, but it's done a fantastic job so far. As we'll see, and keep an eye on this to see whether or not it does play out accordingly. But as I said, when we take a look at our stochastic RSIs, it doesn't look overly positive on the weekly time frame. If I drop this down into the daily, you can still see that we have that potential push upwards. So I'm not too concerned. We can probably get rejected from the upper area, then come back down and see how that kind of goes. One of the things that I am probably most concerned with, as I said many times before, is you kind of have this breakout rally, and then you have these kind of major crashes. Now, the pandemic brought us down pretty low in 2020. lower than we would have actually anticipated previously, after a pretty good run upwards. But we don't have the same kind of level of impulsion that we did see from 2019. In fact, the volumes are only significantly lower in terms of what was actually being transacted on from now versus 2019, right? So it's important that we reflect on actually this move that we're seeing right now is actually, it's not the best. It's not anywhere near the same kind of level as what we saw in 2019. So if I reflect on that just for a second here, and we find my time horizon, which will be right in here, right? It was 196 days. We pushed upwards, right? And we pushed up a total of 342%, right? And if I reflect on where we are right now, we can see that we've been carrying on here for 126 days and we've only had that 88%. So for 126 days, if I go ahead and just pull this one backwards just to buy a few, what did I say, 126? 126 days puts us right about here. And if I measure that distance, we were at about 68%. So for time, but day for day, pound for pound, I'd say that we're performing better, but the structure is nowhere near as impressive. So it's going to be interesting to kind of see how it does play out. At the moment, I think we've got some positivity to be found on this weekly time frame, and we also want to reflect on the negativity as well, right? So I think if we close above this 27,595, we'll probably push up higher. I think that would be deemed very positive by many traders in the space, and we'll probably be targeting out that $32,000 level. That also coincides quite nicely with the other areas of the charts that we've been talking about, specifically up here at 32,917. I do see that as a major resistance blocker for us. So all in all, I do expect us to move down. I just don't expect it to happen anytime soon. Probably over the next few months, we might find something that drags us down there. But for now, I think we still have a little bit more room to the upside. And that doesn't just fuels that bigger issue where we could see a big corrective structure playing out and taking us down very, very significantly. But, you know, we'll cross that horizon as it comes. Hopefully we don't see that. But considering the large institutional investors have been selling at the bottom, specifically they were selling massive amounts of Bitcoin in November all the way through this pump, I don't think that we can expect this low to hold. But you know, let me know what your thoughts are down in the comments below. I'm going to leave this video right there. If you did find this useful and informative, smash that like button. Really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? And guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.